Hi, yeah, that's a great question to start with. And I think the easiest way to explain the gas plan with the different levels is that you have a level one, which is essentially a normal market operation. And then you have a level three, where the government takes control of the gas market and essentially rations gas. They say who's going to get gas and who isn't. And the level we've moved to now, level two, is something in between that, where you continue to have a market operation, but you acknowledge that there's a shortage of gas, there's not enough gas to go around, and you allow companies in the gas value chain to reprice their contracts, essentially tear up the prices that have previously been agreed and pass through the new higher cost of gas to their customers.
So, it feels like
that's been a big development in Germany, that this level two announcement was made last week. But actually, the specific trigger, the point at which companies can reprice contracts, hasn't been reached yet. And that's what's costing Uniper money. As long as there's a shortfall in Russian gas, but they're not able to pass the prices on to their customers, they have to buy gas back on the market. And that's costing them, we estimated, something in the ballpark of 30 million euros a day. And the longer we go, the longer it will cost them. So hence the discussions with the government and the share price reaction yesterday.
So the critical piece, then, if I understand correctly, of Germany moving to phase two is that it will allow the gas contracts to be repriced. When do you expect the legislation to come through around this? And when is that likely to happen?
Yeah, well, the legislation is actually in already. That's been approved, but the government still needs to, the regulator needs to agree that there is a gas shortage, and that's a sort of formal trigger. And then the government needs to formally acknowledge that in order to allow the repricing. But of course, questions are being asked in terms of why hasn't this happened already? And as we know as we've heard from Uniper, this is costing the industry a lot already. And I think one of the reasons it hasn't happened already is it's actually very easy to say, let's reprice contracts. It's very difficult to do. Which contracts? Is it everybody's contracts or just contracts with a relation to Russia? Who's allowed to do it? What about banks and hedge funds who are also counterparties in some of these trades, as well as customers and gas suppliers? And so our impression is that the authorities in Germany are working really hard and fast to try and come up with a rule book, if you like, or a set of guidance about how these repricing steps could be taken. But it is a very difficult piece of work for them, and I think they'll need a bit of time. So our estimate was you probably wouldn't see this repricing trigger until later in July, and perhaps not until the 21st of July, which is currently the expected end of the planned maintenance outage on the Nord Stream 1 pipeline. So that's kind of a key date to keep in mind.
Well, Sam, please continue.
I was going to say it's probably worth flagging as well that there have been some reports in the German press yesterday that there may even be a whole different approach coming. We've been talking about tearing up contracts and just telling, gas companies telling their clients that the price has gone up. Actually, it seems that there's some discussion of attacking that whole problem in a different way through an increased network charge rather than an increased gas charge calculated by the clearinghouse that runs all the gas trading in Germany. And that would maybe be a positive development, good news for the companies. It would suggest that the cost would be spread equally across the market, but then might take even more time to figure out that new approach and how exactly that should be implemented.
Fascinating and really interesting color. Thank you for bringing us that. Sam, I imagine yesterday your phone was ringing off the hook from your clients asking whether the huge step down we saw in Uniper was valid or whether the reaction was overdone. And, hearing your opening comments about Uniper, this 20% fall we saw yesterday, sounds like you're pretty sanguine about the news and that you think the reaction was a little bit overstated.
Well, I think it was, and the market took that view as well. I think the 20% correction that you talked about ended up at 15 at the close yesterday, so there was a little bit of recovery. I think the issue is comparing where the share price is to what you think is fair value, and what you think is fair value depends on what scenario you're pricing in. And of course, the profit warning mentioned discussions with the government about taking equity in the business, and of course that can be very scary for some investors. So I think you have to acknowledge that this is a moment of high uncertainty, but the kind of stance that we've taken is to say, look, whatever problems the government faces with a shortfall in gas from Russia, those problems are even worse if you also have insolvency in the gas value chain. You need the gas players to be financially strong and active in the market. And of course, you need the gas players to bring all the other assets that they have to the table, which includes gas contracts with the rest of the world. They don't only trade with Russia. So I think our general expectation is government will do what it takes to keep the gas industry in good shape. And that probably does require, ultimately, transfer of prices and risk through to the companies which are buying and consuming gas and away from the companies which are kind of in the middle and supplying that gas.